Okay, quick sound check, 1, 2, 3. Okay. Audio seems to be good from my side, at least. Just a quick sound check, everyone. If there's any issue, do let me know. Otherwise, we are going to get started. Again, this is going to be an English session, so any questions that you have, do type it in English, and I'll be more than happy to answer it. Okay, so a quick general advice and risk warning disclaimer. Note that any advice given is deemed to be of general nature, as the information or advice given does not take into account your particular objectives, financial situation, or needs. Therefore, at all times, you should consider the appropriateness of the advice before you act further. CFD and Forex are leveraged products, thus carry a high level of risk and are not suitable for everyone. You can lose more than your initial deposit, so you should ensure CFD and Forex trading meets your investment objectives. Strategies and charts used in this presentation are for example only. You are reminded that past performance is not indicative of future performance. Okay. Just give me 1 second. Okay, so we have to cover a lot of things really quickly. We've got the CPI numbers coming out in 28 minutes. Okay, so I will take a look at everything. Just a quick touch on the CPI numbers. We are going to have that CPI numbers during the webinar. Okay, so let me refresh this. We've got core inflation numbers expected to come in between 6.1 to 5.9%. Forecast is actually consensus is actually at 6.1%. Core inflation is expected to go up. This is the new survey, so I'm just going to update you guys with what I have here. Core inflation numbers expected to come in at 6.1%, up from 5.9%. The inflation rate year on year, the consensus is actually dropping down, is actually 8.7%. Expected forecast is actually 9.1%. Okay, so the expected result for tonight is actually, we are going to focus on the year on year inflation. Expected result is actually between 8.7 to 9.1. I think if the number comes in at 9.1, then either 8.7 or 9.1, right? It's either going to stay the same or it's actually going to drop. The probability of this happening is there. The obvious effect is going to be that the market is going to look at the FOMC's interest rate hike working if they manage to stall inflation or have inflation year-on-year inflation drop to 8.7%. So I think the market reaction would be anything below 9%. I think that's going to be bad for the US dollar. It's going to be good for the euro, the pound, the dollar, the Aussie USD, as well as the indices. But if the inflation rate comes in at 9.1 or even 9.2%, then we expect a quick, strong bounce in the US dollar. Okay, so the next 30 minutes, it's going to be tough. I wouldn't want to open a new position. If you don't have a new position, just wait for the CPI numbers to come in. If you do have an existing position, then there might be some adjustments that you need to make, especially in the stop loss. I think most of you are probably still short swing, maybe long intraday. So do let me know in the comments what you guys have, and then we can take a look at it. But that's the update for now. Other than that, we are really just waiting for the inflation number to come in. Okay, so first in, I've got the pound USD. Let's take a look at this over here. So let's talk about the Aussie USD first. I think a lot of people still have that Aussie USD short. The stop loss is at 0.7025. That's the max stop loss that I'm going to have for the Aussie USD. Right now, it's starting to come off the Ichimoku cloud, but it's actually kind of stuck at resistance 1. on the daily pivot. Then if you go on to the 4-hourly Fips, this is basically the Fib that you are going to have. It's actually at 61.8% Fibonacci retracement level. So if you're thinking of shorting the Aussie USD, I would say wait, unless you're okay with a smaller risk. But I do expect a spike in the market. So if you do go short right now, your stop loss is going to be at 70.25. That would put it up there. You're risking about why am I not be able to see what's the percentage I'm risking? Sorry. Stop loss is actually going to be about 40 to 45 pips. In terms of target level, obviously, if we do expect a short to happen, then we expect a CPI number to be high. That's the only reason you want to go short. If you expect CPI numbers to go up, then you really want to go long on the Aussie USD. But if you're going short on the Aussie USD, you got your target at pretty much 69. So if the CPI numbers come in a little bit higher than expected, then we do expect a potential drop really quickly towards 69. But that's if you want to go short. At this point in time, the requirement for you to go short is actually for the stochastics to turn around, and we are not seeing that as of yet. So it's going to be a tough one for the Aussie USD, because if we go by the range this week, is actually still stuck between 69 cents and 70 cents. So yeah, if you have a short position, you really want to have your stop loss at a minimum at 70.25. If you're planning to go short on the Aussie USD, then this is a plan. You're going to be risking around 40 to 45 pips. In terms of target level, you're looking at around 80 pips if you are planning to go short on the Aussie USD. The risk is actually to the upside for these inflation numbers. There's actually a higher probability. There's a risk that the number is actually going to be high because we haven't seen inflation drop yet in the past 4 months. So inflation is still picking up. The consensus today, the updated consensus is 8.7%. I think that number is a bit off, 8.7%. So I don't know what's going to happen in the next 20 minutes. We'll find out. But let me just remind you, the risk is that the inflation could be high or remain elevated at 9.1, or if it stays above 9, then it's still going to be high for the US inflation numbers. Okay, so that's the Aussie USD. I much prefer to go short, having my stop loss at 70.25 and targeting 69, but that's me because I'm more biased. I don't think inflation numbers is going to go down yet, but again, I might be a little bit biased because I still have a running position on the Aussie USD. My stop loss is at 70.25, so if you guys have that short position, make sure your stop losses are at 70.25. Do not trade without stop loss, especially tonight. It's extremely risky if you're trading without stop loss, if the market is expecting the inflation number to come in. And also, no FOMC meeting. Again, let me just remind you, no FOMC meeting this month. So inflation numbers, it's going to be basically what's key for the market this month, actually. So that's the Aussie USD. I much prefer to go short on the Aussie USD. Again, I might be a little bit biased here. Euro USD, we're still looking at resistance coming in at 1.025. Let me just zoom out a little bit on the Euro USD. Okay. So here we have the Euro USD. It's pretty much still range bound. Range is basically between 1.01 to 1.02. Sorry, it's actually 1.01 to closer to 1.3. But I'm taking 1.0250 as kind of the limit, and that still applies for the Euro USD, because if you take a look at the Euro USD, it's basically still range bound. We don't have any trend going on for the Euro USD. Stochastics might look like it's crossing up, but again, this is a daily, so it will require a daily close above 1.0250 to actually cross to the upside for the stochastics. If it drops below 1.02 today, then the stochastic is gonna go down as well for the Euro USD. Aussie USD stochastic still points to the downside. Long-term target for swing traders, we are still looking at a potential for this one to complete the D level around 67 to 66 for the Aussie USD. Next up, it's the Pound USD. We're going through this really quickly because we are going to switch into a small time frame once we have the inflation number. Pound USD, it's basically also range bound between 1.2 to 1.2050. That's basically your key support level. In terms of key resistance level, we are looking at 1.23. Right now, it is trading below the pivot level on the weekly pivot for the daily. So for pound, again, we are looking at okay, so we're still looking at an intraday resistance at 1.2150 to 1.2175. We are still pretty far off from that resistance. In terms of stochastics, looks like there's a potential for this one to cross to the downside as well. But if you take a look at the whole Ichimoku cloud, it's actually pretty neutral. It's just trading around the Ichimoku cloud. In terms of the Senko span A and B, it's just crisscrossing up and down, so it's actually a really flat market. We do have that intraday resistance between 1.2150 to 1.2175. What if inflation stays high and core inflation drops? I'll be honest with you. I'll really be honest with you. I think about 90% of traders out there are probably just going to focus on the year-on-year inflation. Maybe 10 to 15% will take a look at the core inflation. But we'll need to see how big of a drop in the core inflation. But I mean, if the inflation number goes up, then core inflation would likely stay the same or maybe even go up. Okay. Okay, so we got Pound USD. We'll go back to Euro USD. Right now, we are looking at that 1.0250 on the Euro USD. In terms of daily pivots, the range is actually really small. So I do expect a breakout scenario to happen. We'll take a look at that really soon. It's just right now it's a little bit too late to actually take a look at this one. But if you trade the Asian session breakout, you should get out of your position because the Asian session breakout, it's really small. It's basically just this. So you should be out of your position if you are trading the Asian session breakout during the Euro Open. You should be out. Now, in terms of range, I know it's not much, but we're looking at a 1-to-1 for breakout scenarios. It's just about 20 pips. So you should be out of that position. If you do have that long position, just be mindful of what's going to happen. We are taking a look at 1.0250. If price goes back down below 1.0250 in this hour, which we can't actually identify because we're looking at the hourly time frame and the inflation number is going to come in 60 minutes. Okay. All right, gold. Yeah, I'll take a look at gold. Just give me a second while I go through all the majors first, and then we'll take a look at gold. Just type it at once. I'll take a look at it, and don't worry about it. Okay, next up is dollar yen. So I'll get rid of this one. So that was from Monday. Okay, dollar yen. Again, I'm looking at a potential scenario where the stochastic is actually dropping down below 20. So it could mean two things. If it stays below 20, obviously it could drop down lower. But we're looking at an intraday support around 134. But we are pivoting at 135. So if there's any transition above 135, then we could be potentially looking for more of a long on the dollar Japanese yen. Again, if you are going to be looking for a breakout scenario, the range for this one, it's actually going to be the high from the 7th of August to the low on the 8th of August. That will give you a range between 135 to sorry, 134.35 to 135.60. That's about 123 pips on the dollar Japanese yen. So that's the range. If you're planning to trade breakouts, that's the range breakout that's available. You can trade smaller breakouts if you want to. The smaller breakouts is actually going to be here and here. This would apply for more of an intraday trade. So it's really up to you. You basically have two range that you can work with. One is 60 pips, the other one is 120 pips. It's completely up to you what you want to do with this one. Again, I'm more biased for a stronger dollar. I think the potential for a stronger dollar is there, so we'll see what happens there. Other than that, for an intraday trade, the dollar Japanese yen is actually within the Ichimoku cloud, so be really careful with this one. Okay, I'll quickly take a look at gold before the whole fiasco happens. So going to gold really quickly. Right, this is daily on gold. I think we're still looking at resistance, 1795 resistance, still capping the market from further progress. The stochastic is still up on the daily. Okay, but again, we're looking at weekly resistance one coming in at 1795, and if you know your gold well, then you know 1795, it's a very strong key level, and you need to be careful with that 1795. So we are going to use 1795 for our intraday look here. Okay, so let me just get rid of all that stuff there. We are trading below pivot level. 1795, it's definitely something we want to focus on. Okay, so this is going to be a key resistance for 1795 to 1800 actually. So if you plan to go short, just make sure your stop losses are actually beyond 1800 for gold. Otherwise, it's looking like this. It's really being pressured to the upside for gold, but I think the potential limit is actually 1795 to 1800. So that's that. If you are planning to go long, then your stop loss needs to be down here. In terms of range, we basically have two key levels to watch out for: 1787, 1783, and the next one, it's basically right around at 1770, I believe. Okay, so pick a poison. The way we look at this is this: if the inflation number do come in higher, then expect gold to come down really quickly. We do expect a potential for a strong US dollar. I think the market is being look. If you take a look at the movement in the market from Monday, it's actually pretty tame. Everyone's just waiting for that CPI numbers to come in 12 minutes time, but that's basically that. Okay, so for gold, if you are planning to go short on gold, just make sure your stop losses are beyond 1800 in terms of target levels. You could be looking at about 1780, and then you can adjust it to 1700 if you want to. Risk reward ratio is okay, but if you go for the small target, risk reward ratio is not even 1-to-1. You're looking at about $9 of risk for a potential $8 of gain. Is it worth it? Completely up to you. Okay, so we've got a few minutes left. I'll just go through the requests here. We talk about pound USD. New Zealand USD next. Okay, let's take a look at New Zealand USD. I think New Zealand USD, that's 63.25. Was that hit just now? 63.25. Let me adjust it. Yeah. Okay. So for New Zealand USD, I think there was someone that had a short position on New Zealand USD. That stop loss should have been taken out at 63.25. I believe that was the limit. For now, New Zealand USD, it's still going by this Fibonacci here. There's potential for that move towards 63.36. I don't think it's possible if the CPI number comes in higher. So we are going to be looking at intraday resistance at 63.25. No hourly close above 63.25 means no go on New Zealand USD long. Other than that, if you're planning to go short, I don't think it's quite time yet. We basically need further confirmation. We need that cross from the stochastics on the New Zealand USD. Okay. Other than that, it's not much. I mean, if you take a look at the breakout here, I mean the Asian session breakout, if you go by the Asian session breakout, you should be out of your position, because if you go by the Euro session breakout, you should be out of them, because the range, it's actually just going to be from, I believe it's actually just going to be from here to here. That's basically the range. So if you did your breakout, it'll be there. Your stop loss is actually going to be there. You should be out of your position right now with the New Zealand USD, Aussie USD, Pound USD, Euro USD, if you take the Euro session breakout. Okay. US session breakout, we do have time for US session breakout, because for the US session breakout, we are going to rely on, we still got an hour and a half for the US session breakout, so there's no rush for the US session breakout. Okay, let's go. Next up, it's XTI. All right, US oil. Support one, pivot, blah blah blah. I think we're transitioning below the Ichimoku cloud again. If we do bounce off, then I think the intraday support level would actually come in between 89 to 88. If you do have a long position, I think you should have your stop loss at 88 at this point in time. You need to give this a little bit of a room to go. So 89 to 88, pick a level there, but I much prefer to have a stop loss below 88. Ideally, you want to have your stop losses below this low here. If you're planning to go short, make sure you do have a stop loss. If you do have a short position in oil, then your stop loss is actually going to be at about 92.50, 92.60. Okay, that would be your stop loss for the oil if you are trading it short. Other than that, if you're looking for a buy, we don't have a buy yet. I would prefer for price to actually potentially bounce off 89 or 88, but we are not seeing that bounce yet. Even from the stochastics, it's still pointing to the downside. So it would be a no-go for an intraday trade on oil. Price is actually hovering around the Ichimoku cloud, so there's a lot of risk involved if you are planning to go long on oil at this point in time. Now, if you go through the daily level, the daily time frame for oil, we did break lower on oil. So I think the limit was what, 94 or 92. So we have traded below 92, 94, but right now this is testing the weekly pivot level. That's basically at 91.38. If there's a daily close above that, then yeah, there could be a potential bounce up. That means if you're planning to go long for the long term on oil, it needs to close above 92. Again, because we are looking at a potential risk of a potential stronger US dollar if the CPI number comes in higher than expected, or as is the same as 9.1, then that's going to be above market expectation. Then we do expect a potential downward pressure on US oil. Okay. So we took a look at that. Next up, it's the indices. We've got 6 minutes. Don't worry, I'm keeping track of the time. Okay, so let's take a look at the US 30 first. US 30 within the Ichimoku cloud, daily resistance still at 32,900. So yeah, give or take, it might go up to 3,300 on 33,000 on the US 30. Right now it is within the Ichimoku cloud, waiting for the stochastics to cross over. If it does crosses over and price does break below the Ichimoku cloud, then I think that's where you can go short on the US 30 right now, stop loss, it's basically still at about 33,000. So in terms of target, I don't think it's going to be worth your while, because we do have support coming at 32,500. Risk reward ratio at 0.8. So yeah, it's not that great if you are planning to jump in on the US 30. I would wait for the US market to be open before you actually execute a trade on the US 30. Again, all dependent on the CPI numbers. In terms of Nasdaq, we still have that resistance around 13,200. In terms of Fibonacci's, you are going to be using this Fibonacci. We are basically just slightly above 23.6. It could get capped at 38.2. So in terms of price movement, are we going to see a rejection at this daily pivot level or not? We don't know yet. Again, highly dependent on the CPI numbers. I think it's very rare that I'm pretty uncertain about things, about again the CPI numbers tonight. It's basically just going to cause a lot of volatility in the market. So do keep in mind, if you do have your long or short position, make sure you have a stop loss. What effects on gold? Correlation between CPI and gold. If inflation goes up, FOMC needs to hike interest rate. A higher interest rate is actually costly if you hold gold. So the correlation is that one, higher interest rate, it's bad for gold. Number two, gold it's actually traded against the US dollar. So if the US dollar goes out, obviously gold is going to go down. It's very, very simple logic. So whatever the result, it will make a rally for the US dollar pair? No. If the result comes in at 8.7 or lower than 8.7, that's actually really, really bad for the US dollar right now. So yeah. Selling yen. Selling yen still on track for this one, no changes. This was from Monday's session. I don't have an issue with this trade on the sterling yen. It's picking above pivot. Again, yen crosses, it's probably going to be different, right? Remember what I mentioned on Monday. By the way, if you guys missed Monday, we do have a session on Monday, just especially just for the Telegram channel. Okay, for the yen crosses, if the dollar yen gains, there's going to be a spillover effect to the euro yen and the sterling yen. So I'm not too concerned about the sterling yen side of things. I'm pretty happy with the current position on sterling yen. Just make sure your stop losses are actually below 162.50. Minimum is actually at 162.50. In terms of target level, you could be targeting R3 at around 164.75. Again, this was projected on Monday. Not expecting any changes on sterling yen. We still have leftover momentum there. So if you want to diversify a little bit and you don't want to focus too much on the dollar pairs, then yeah, have something on the yen crosses as well, just as a backup. Volatility is going to be there. It's starting to move already. Yeah, the market is starting to kick off. So yeah, we're just waiting for the numbers to come in. Pound AUD. Pound AUD is actually pretty flat, so I wouldn't touch Pound AUD right now. But if you are going to be planning for a breakout trade, then you could actually use this range to trade that breakout. That's 1.740, but you need an hourly close above it, right? So might as well just wait until it's above the Ichimoku cloud. If it goes above the Ichimoku cloud. Just make sure your stop loss, it's actually going to be at this low here. Target wise, I think it's okay if you are going to be targeting a little bit higher on this one here, but risk reward ratio is basically going to be about 1-to-1 on if you are trading the breakout, but that's basically the range. Market starting to move. Let's focus on Euro USD. CPI numbers should be coming out any moment now. Okay, CPI number just came in. It's 8.5%. It's actually lower than expected. So that's really, really bad for the US dollar, obviously. You guys can see what's going on here. So Euro USD, Aussie USD, dollar yen should be falling down right now. Let me just double check. Yep, it's dropping down like a stone for the dollar yen. So again, the inflation number is actually coming in really low, 8.5%. Core inflation number is actually stable at 5.9%. But again, the headline inflation number is 8.5%. The consensus was 8.7%. The previous number was 9.1%. This is a very unexpected drop. That's a 0.6% drop on year inflation for the US. Obviously, this is going to be really bad for the US, and I don't think it's actually going to be basically just one way for ongoing right now. So if you do have a short position on your if you have a short position on dollar yen, great. If you have a long position on the Aussie USD, Euro USD, and Pound USD, great. Otherwise, we all got stopped out if you have a short position on any of these currency majors. Okay, pretty simple. Gold should be up to, it should break above, yeah, done. So it is above 1795, above 1800, obviously. Stock indices should be up really high as well. So this is extremely good news for the market. This is going to drive positive sentiment into the market, and this is basically going to guide the market for potentially the next 2 weeks on this one here. Okay, so let me just go through some of the dailies. So we are picking above Ichimoku Cloud on the daily, especially on the Aussie USD. This is above 70 cents, 70.50. 70.50, it's basically the intraday resistance for the Aussie USD. Break hourly, break above 70.50. That's basically going to trigger further run to the upside for the market. So you guys are probably busy sorting out your positions. But the numbers done. Inflation rate month on month, it's actually 0%. Expected was 0.2%. So month on month gain is actually slowing down. Core inflation month on month is actually dropped down to 0.3% from 0.5%. All the inflation numbers, again, all the numbers are negative. Therefore, it's bad for the US dollar. So what the FOMC is doing is it's great. Now the effect on this one here is basically this: the next FOMC meeting, they might do 75, they might do 50, but I think 100 basis points is out of the way. That's pretty much done. We have seen a change in inflation rate finally. After what? 8.3, 8.6, 8.1. Basically since April. This is the first drop since April. So that's about 4 months worth of data. Sold dollar yen from 134.89. Go ahead, keep that. How's the spread, guys? Was it really bad just now? Okay, if you do have a short position at 134.89, then you should be moving your stop loss to break even right now. Just trade it. We're not going to be looking at a volatility where the market's just going to flip back to 134.89. So if you do have that 134.89 trade, you are 215, about 175 to 200 pips in the run. So maybe you want to scale out a little bit. Right now you can scale out a little bit, keep the rest of the position, stop loss at break even, let it run, or if you want to lock it down to 134.50, I think that should be okay. Okay, now let's look at how far things can go for Pound USD. Very interesting because we need to go into the 4-hourly time frame. We basically need to use this Fibonacci from up all the way up there. We are looking at 1.23. I think we're still capped by 1.23 anyway. But let me just double check. I think what we're looking at from a daily level, that still applies for Pound USD. Yep. So Pound USD, there's still going to be that resistance at 1.23. Are we going to break above that resistance today? I don't know. That's a really huge jump. I mean, if the market jumped up 300 pips in a day, I think that's really, really huge. You should be getting out of your position. But if we go by the daily and the 4-hourly time frame, we do have that resistance coming in right now at resistance 1 weekly 1.2250. That's number one. And then beyond that, we've got 1.23 on the pound USD, and that's basically the daily resistance. Beyond the daily resistance, obviously, we've got a lot of targets to go. Right, we have resistance 2 at 1.24 and then 1.25. So there's a lot of room to go, but we need to go beyond 1.23 on the pound USD first. Is it still recommended Asian session breakout strategy? I think so, yeah. I mean, if you're trading on the Euro session, that's basically how it is. Okay. What is the best time to open a new position after this kind of news? I would wait until the new hour clocked off. So wait for another 20 minutes. Let this one jump around, because if you don't have a position right now and you chase after this, it's probably not going to be the best entry. Because if we go by the hourly time frame, we could see a little bit of resistance. Because, all right, going into the 50 minutes time frame, just take a look at this one. There's a huge spike to the upside. So logically, market typically would come back down. There's going to be profit taking in the market. So I mean, yeah, if you're looking at this from an hourly perspective, just wait for it from once the hourly time frame closed, then you can go long on this one. Just be mindful, if you do take a long position on the break of that 78.6%, your stop loss is going to be all the way up there. Down there is actually 169 pips. So even if you target 1.23 or 1.24, your risk reward ratio, it's going to be less than 1. Okay, I wouldn't rush things. I would just wait. We've got the numbers. Let the market react to the numbers. We don't need to rush. Remember, what this CPI number is going to do is that this is going to be the guideline for the market for the next 2 weeks. So 8.5% drop, it's really, really low. So I don't think that's going to be a whipsaw on the market. This is basically just one way. I think the market is expecting the inflation number to come down. So that has come down. This is a positive sentiment for the market. The equity market should be in green today. Other than that, I don't think we have any key numbers, right? We've got PPI numbers tomorrow, but that's basically that. We've got the GDP numbers for the UK this week on Friday, but again, nothing's gonna beat the inflation number that we are looking at right now. Euro USD should be out of the range as well. Okay, so be mindful with Euro USD. If you do have a long position on Euro USD, you might want to scale out a little bit, adjust your stop losses to break even. Let this one run. Right now, if you do have a long position below 1.025, then you can move your stop loss to 1.025. If you're planning to go long on this one, just be mindful. Your stop loss is going to be about 200 pips to the downside. In terms of how far it can go, it might potentially go to 1.05 for the Euro USD. But again, it could take a day or two. So I would find more opportunity if the market corrects itself. You know, if it comes back down to 1.03 or 1.0250, test for support, bounce back up. I prefer that. Again, I don't think we are in a rush to jump in, but intraday traders, if you have the right position, then I would suggest move your stop loss to break even, let the trade run, but don't go nuts on your target level, because there are still going to be limits, even though it's really, really bad for the US. Okay, how bad is it for the Euro USD? This is basically the range. What happened to my resistance level? All gone. Okay, anyway, for this one, that's basically that. We still got 61.8, we got 78.6. That's basically where the 1.05 is. This was the range it was traded in. We broke out of that range, so this is great news. If the daily close is like this, then yeah, tomorrow and day after, I think we might see further progress towards 1.05 on the Euro USD. Okay, but do it smart, do it smarter. Wait for a little bit of a pullback, because I think profit taking it's likely going to happen. So I don't think there should be any rush. We could potentially be looking at a resistance to come in at 1.0350. I don't want to short the Euro USD at this point in time. Going long on US dollar with CPI numbers like this, it's probably not going to be worth it. So don't attempt to do this. There's just going to be a lot of pain if you do that. Okay, so what's next? Let's take a look at yen crosses. Sterling yen, there should be a spillover effect on the sterling yen. So sterling yen is actually flat. Okay, where are my levels? It's gone. Okay, anyway, huge spike on the sterling yen, but the overall tone it's that it hasn't broken below the Ichimoku cloud. So we've got that run in the US dollar. We've got the opposite direction for the yen crosses, mainly because the pressure on the dollar yen itself. So the dollar yen drops really quickly, puts a lot of strength on the Japanese yen. That in turn affect the sterling yen and the euro yen. So sterling yen and euro yen should be moving like the dollar yen, unlike the pound USD and the euro USD. What's the best time to trade pound USD and the euro USD? European Open is great. European Open all the way up until US lunchtime. It's great to trade pound USD and the euro USD. So depending on where you are, but yeah, just go with New York time. If New York hits 11 o'clock, 12 o'clock, I think that's basically time for you to probably end your trade. Okay, so sterling yen like that. Next up, it's there we go. It finally popped up. So stop loss should be taken. Stop loss should be triggered, but I would still keep that trade if you don't have that stop loss. But I mean, if you do have a stop loss at 162.50, there's a spike here. That's taken out. Right, we should be out of this trade on the sterling yen. Okay, is it me or my chart seems a bit laggy here? Okay, so sterling yen, euro yen, if you're planning to open a new position, I would be mindful. It's within the Ichimoku cloud. It is for the sterling yen. Euro yen should be the same. It's within the Ichimoku cloud. We still have a little bit of a support here between this high and this low here. That's basically at 137. Okay. Again, if you do have this position, you should be out of it before the stop loss hits you. But other than that, this trade is pretty much done. Right now, the current support is actually at 137. We need an hourly close below 137 for this one to trigger a quick drop to the downside. Right now, it is still risky. We still don't have any confirmation from the stochastics. We're not going to see that until the next hour kicks in 15 minutes. But basically, if you do plan to go short on the euro yen, make sure your stop losses are above 138.50. But let me just be frank with you. With how the euro USD and the pound USD was gaining right now, maybe going short on the euro yen and sterling yen is probably not a great idea either. So market should be calming down yet, or is it still pushing up? It's still pushing up. Okay. Wow. Still going. Gold at 1806, so a resistance at 1800 basically just got taken out. So forget about going short. This one is also gone. And if we go for gold on the daily, I think all the key resistance are taken out. We basically just need a daily confirmation. on gold today, if it closes above 17 basically what it is. It closes above this 1800 level, then we are probably going to be seeing more of a transition towards the Ichimoku cloud. It might slow down a little bit for the next few days, but that's basically the current trajectory. It could potentially stay above the 80 level for a period of time for gold. Okay. Right. What's next? VIX, it's actually stable at 22, so I'm not too concerned about VIX. I don't think there's going to be key high volatility on VIX. US 30 should transition. Nasdaq 100. Okay, looking good. Bitcoin should rally up. Yep. No connection whatsoever, but I obviously because it's traded against the USD tether, weaker USD is basically just going to drive crypto up. But that's basically that. See? I wasn't expecting 8.5%, I'll be honest with you. I was expecting really at about 9% for the numbers tonight. So, see? It's good to be proven wrong. But other than that, the market's just running at this point in time. It's a little bit tough for you guys to jump in. US 30 is up really strong. We still have a lot of room for US 30. We might need to go to 4-hourly time frame on this one. Current projection, we've got 2, we've got this one, we've got 161.8 there. I think this one should overlap with 161.8. Yep, the 161.8 overlaps at around 33,350. Okay, for all the time frame just turning around, so we should be able to see that 3350. Yeah, around 33,350 if you have a long position in US 30. If you're planning to jump in on long US 30, just make sure your stop losses are correct. We basically need to have a stop loss at around 32,000. Is it worth it? I don't know. Let's check. It's probably not worth it. I wouldn't even bother chasing this unless you are okay with the risk. But I mean, if you trade it logically, it's kind of tough to chase whatever the move is. Will it change the US dollar crosses to become bullish? Fundamentally, yes. I think that's going to be the view. That's why I say this is going to be a deciding moment for the month, because we don't have anything from the FOMC this month. We've got a CPI numbers. CPI number comes in really low, 8.5%. The equity market is basically just celebrating it right now. Is it going to be a turnaround for the majors like the Aussie USD, Pound USD and stuff like that? I think so, yes, because we just broke above point C. This is no longer valid. We transitioned above 70 cents. We basically need a daily close above 70.50, and then we could be breaking beyond 61.8%. Therefore, we could be potentially returning towards 74.50 for the Aussie USD. So I mean, yeah, Aussie USD is still alright. If you plan to go long on the Aussie USD, because it's such a small range, right? You can have your stop loss at 69, your initial target at 72 cents. That could still work if you want to go in long on the Aussie USD. It's just this. This is looking at it from a daily perspective, right? But if you look at it from the hourly perspective, it might become overbought. So logically, we should see a little bit of a correction back to test 70 cents before we bounce all the way up. So I mean, medium term trend, yeah, it might shift this, right? If today maintains a bullish position, it might shift this, but tomorrow you might see a little bit of a sell-off happening. I'm counting on more on that correction, because the market wouldn't run all the way up without any correction, right? I mean, if the market runs 300, 400 pips without a correction, something is really, really wrong. And from a logical perspective, if you are in that trade, right, you might want to get out. So there's going to be profit taking in place, and if profit taking happens, then we are going to be looking at a potential technical correction. You know, right now we could see price move all the way up to 71 cents. It might stop at around 71 cents and then correct itself. So I'm in no rush. If you're asking me what am I supposed to do right now, I wouldn't chase after this. I would wait for more of a correction to happen, because no matter how you look at it, we take a look at this one, we got 69 cents, 71 cents, ultimately we got 72 cents as a target. So we need to consider Aussie USD with 71 cents as a potential intraday resistance, right? We haven't even touched that. Now, for the market to touch that 71 cents, which is around resistance 2 on the daily pivot, it's a huge run. And if we take a look at the run today, that's basically that. That's already 150 pips. If this one runs all the way up to 73 cents, for example, I don't think that's possible, because that's like 300 pips on the Aussie USD. 72 cents maybe, 200 pips, it's okay. But if we take a look at this one, we should be looking at a potential correction to happen. So what time is it now? Like 9 minutes to go before the hourly time frame close, right? But we are technically looking at market pausing for a little bit. So we're not seeing that follow through happen. We could potentially see 71 cents capping in, market comes back to test 70 cents, then I might get a better entry. So I'm in no rush. If the market goes up, it's okay, let it go up. I'm in no rush to jump in. Okay. If there's a correction, how far will it be? It'll be small. Unfortunately, it's actually going to be small. It's not going to be like a major correction or anything like that, because it kind of defeats the purpose if there's a major correction. What does the current inflation rate means? That the US economy is improving? Okay. What the current inflation rate means, the headline inflation at 8.5%. As I said, we haven't seen a drop since April, right? So April to August, 4 months, and basically from April to August, Fed has been hiking really, really high. Really, really quickly, right? We've got 275 basis points, we've got 250 basis points, so that's already 2.5%, basically in the past 4 months. So there was concern about a potential recession if the inflation number keeps going up. There's concern that the economy can't take it. It can't get stressed out enough. It'll get stressed out. The economy can't take it. Recession happen. Now, if there's a recession and then there's a high inflation, then that's going to be an economic problem in the U.S. So with the data coming down like this is actually good. From the economic point of view, FOMC is basically keeping price inflation down, right? Price stability down. So inflation is down. High inflation is not good. US inflation target is actually at 2%. So this is still high, but it's coming down. So what it's saying is whatever FOMC has been doing, it's starting to work. It's showing signs that it's working. So even if the US economy goes into recession, we've got falling inflation. If the inflation falls really quickly, then the US economy might not go into a recession. Okay, the issue that we have with the FOMC is that they need to hike interest rate to keep inflation level low. We haven't seen that in 4 months. We have seen that right now. We have seen the number 8.5%. That's even lower than a consensus of 8.7%. So in a nutshell, from a fundamental point of view, it's actually good. Bad news, it's good news right now for the market. So we have seen inflation numbers come down. So I think that's great. Therefore, FOMC going into next month, they might just hike 50 basis points. because they'll say that, you know, we have seen the headline inflation number come down really quickly, 0.6%. We don't need to hike aggressively. We will just hike maybe 50 basis points instead of 75 basis points. So that's basically what the market is kind of expecting right now. I know it's a weird scenario, but the market basically doesn't like it if FOMC goes really hawkish. We are seeing the potential for the FOMC to be less hawkish in September. So basically, stock market will rebound. I think we are going to see the stock market rebound. Yen stance, you mean Bank of Japan? Does the Bank of Japan still remain dovish, or are they going to intervene? That's a new question. I think from past comments from Bank of Japan and the Finance Ministry in Japan, it's unlikely for them to intervene. But if the, if you take a look at the dollar yen right now, are they going to intervene? Probably not, because if we zoom out, take a look at this one, it's not that bad, right? The 61.8% is still there. You know, that was where the US dollar bounces off from. So we still have that support there. So any comments from Bank of Japan is not going to be tomorrow. So I don't think you need to worry about it. Is Bank of Japan going to say something, or are they going to remain dovish? I think they're still going to remain dovish. I don't think they're going to be hiking interest rate anytime soon. They basically haven't been hiking interest rate for the past, 30 years. So yeah, I don't think there's anything to worry about from Bank of Japan, at least not yet. We'll worry about it when they intervene directly into the market, then that would dictate where the yen is going to go. But at this point in time, I think it's okay for the yen. So dollar yen is looking okay. Euro yen should be okay. If if one goes down, we still got 134 support. So there's a lot more support to the downside, in fact, for the yen crosses. But again, if you take a look at the euro yen on the daily, it's actually trading below the Ichimoku cloud. In terms of correction, it's actually at 50%, potentially up to 61.8%. So around 138, we could see more of a continuation to the downside for the euro yen, sterling yen, dollar yen. But again, needs to be seen. I need to see how deep is the correction tomorrow. I'll post you guys on Telegram tomorrow. After what happened tonight, we basically need to process what's going to happen in the US session. Once that's done, we can process that, and I can give you guys an update tomorrow on the yen strength. Where is it going to go? Euro USD, sterling USD, how is it likely going to go? But again, we basically need in 2 minutes time, the US market is going to kick off, right? I'll stick around for an extra 5 minutes. I just want to see what the market's going to do for the US 30. Is it going to just slam it back all the way down, or is it going to go to 161.8% and then fail at 161.8%? I don't know at this point in time, but I'm looking at the probability that we are going to be looking at that move there. Even if it does, if the rejection happened, we're still going to be well supported at 33,000. If you're planning to go for a long on US 30, I would wait for price to come back down to around 33,000. That just gives me a much better risk to reward ratio. At least it's going to give me about 1-to-1 risk to reward ratio. So we'll see what happens during the US session. But yeah, I think stock market's going to have a fantastic day. I think a lot of people are going to be happy today. Pound USD potential head and shoulder. Let me see. On the daily, inverted head and shoulder, yeah. Let me just draw this here. It's a little bit too steep, but yeah, could be. But again, in terms of target level, yeah, we could potentially be looking at 1.25 again on this one. Is it going to be immediate? It's probably not going to be immediate, right? If the reversal happens, then it's likely not going to be immediate. It's actually going to be a little bit slow because we do have that resistance at 1.23. So I still need to look at 1.23 because that's basically where the neckline is. If this is an inverted head and shoulder, yes, it could be, but we need a break above 1.23 for you to confirm that. So if you're going by this and you want to trade this, then this is basically going to be your target levels for pound USD if you go by head and shoulder. Sure, it could go even higher, but again, we've got the GDP numbers coming out on Friday. So can the GDP USD break above 1.23? That's going to be the big question because we need to see a break above 1.23 on the GBP USD. Again, this is from the outlook. Okay, I scale my monitor a little bit too large today, so I'm having a little bit of a difficulty just showing you guys a lot of stuff on the screen. Okay, so yeah, 1.23, we need a break above 1.23. That will transition this above the Ishimoku cloud. So if you're looking for a trend reversal on pound USD, on the Euro USD, we need to break above the Ishimoku cloud. So we need to break above 1.23. So we are not seeing that happening now, because we still need to transition above 1.04 at least on the Euro USD. Pound USD 1.23, we need to transition above that. Okay, the US market just kicked off. Let me just take a look at the stock market. So yeah, I think we are going to be looking at a push higher towards 33,350, at least on the US 30. So I mean, futures wise today, how far has it run up? It's gone up 500 points, right? I mean, the last time big things happened in the market, it actually went 800, 900 points, and then it swings both sides. So at this point in time, I think it's fair if we're looking at about 650 points gain intraday. Okay, Nasdaq. And then we can wrap it up. Nasdaq, it's up, but I would be really careful because we are not above, we're not creating a new high as of yet. In terms of FIB, we're still governed by this FIB here. We just transitioned above 78.6%, so we still have that resistance at this level here, around 13,400. So cap at resistance 2, daily pivot. So we'll see what happens. It's run up really quickly, so let's just check. Let's just check Apple. We're not seeing a lot of movement. It's still pre-market. It's opening at 9:30, so we'll see what happens in about 30 minutes time. Still pre-market. Pre-market is already pointing up at 167.50. So the market is actually going to gap up. The gap for Apple, for example, it's going to be about $2. It's nearly 2%. So yeah, I think the stock market is going to gap up. We are going to kick off at 9:30 for the stock market. So, but pre-market is already up there, 167.52 for Apple. Amazon pre-market is already at 142. That's huge. So I think we are going to be looking at a stronger gain in the US 30 and the Nasdaq 100, especially the Nasdaq 100. I mean, if we take a look at the tech sectors, we are looking at a potential jump up of 2 to 3% on open. Okay. Gold's coming off. So yeah, as I say, don't rush. No need to rush. I don't think there's a need to rush. So if you take a look at gold, it actually didn't close above 1800. This is nuts. If you jumped in just now, you're gonna get dragged down what, $8 already. So we haven't seen a close above 1800 on gold, especially on the hourly time frame. So don't be too quick, don't be too hasty on trading The market, I don't think you need to rush for Euro USD, Aussie USD, and stuff like that. No need to rush. Okay. All right, I think we can wrap it up for tonight. No further questions. All right, so it has been a very interesting result, a very interesting outcome for the CPI numbers. So yeah, good luck with the trades this week. I'll keep you guys updated on Telegram tomorrow. Other than that, I'll see you next week. Stay safe. Have a great week.